Hi guys, and welcome back to a new video. Yeah, indoors today. The weather is a bit gloomy today, so not likely that I'm gonna go out. This topic is about how to diversify your investments, how to maximize your profits and minimize your risks. There is no such a thing as eliminating risks altogether or just hitting 100% profit on your investments, but there are ways to tweak things around and just to try to hit that sweet spot between maximum profit and minimum risks. So, starting first of all, let's have a look at crypto. Crypto, of course, is a very important topic here on this channel and very important topic in general, because crypto currently, Bitcoin is leading the whole thing at around 60k. Actually, it's currently 59, and fear and greed index is showing fearful state with 34, meaning that many people are not really that excited anymore about the market, but it's going to be just a phase in the market, and then things will pick up again and go all the way to a new all-time high, new exciting territory in the market, and this will lead to a new altcoin bull market. Altcoin bull market, meaning that once Bitcoin is finished with all its ups and downs and volatility, altcoins, meaning everything else apart from Bitcoin, can start moving and can start moving in high volatility. So that's also something to consider whenever you're trying to diversify. So let's touch on diversification as a holistic thing, how to diversify. And by the way, if you need this video with more graphics, I can share my screen and I can just do some charts and things. I can happily do that, but let's just talk here, pure talking, man to man, nothing in between. So diversification means, generally speaking, if you have 100k to invest, you just split this 100k into portions, smaller portions, and to go heavy on some stuff and go less on other forms of investments. Generally speaking, I'm a Bitcoin maximalist, or I'm a cryptocurrency maximalist, but that doesn't mean necessarily that I reach 90 or 100% on crypto. That's completely stupid. I did that before, was quite exciting, but I didn't sell. So I got hit hard by that kind of fact, and now I do believe that diversification can be quite paramount for successful investment in the long run. So what to do right now and how to diversify. If you have 100 and you want to diversify, I do assume that you need to put a good chunk on crypto, but probably between 30 and 60%, and the rest can be between stocks and real estate. Depending on your financial position, of course, real estate can be quite lucrative for you. Why am I saying that? Well, I showed you last video or some videos before. That's, for instance, that's Idealista. That's the website I'm using to hunt for apartments and real estate investments in Spain and Italy and Portugal. So here, for instance, we are in the city of Valencia, and you can see here that's the monthly rent for units near the sea. It's not really it doesn't have a sea view, but it's nearby and close enough to the sea. And bear in mind, that's really off season. Currently, we're nearly approaching end of September, beginning of October. So many people are kind of considering that end of a season. So it's not really peak. Peak would be in between the months of June and all the way till end of August or so. That's peak price. That's, you can find like people renting out apartments for like 3, 4, 5k per room. So things can be quite lucrative over there. And bear in mind that, generally speaking, real estate in Spain, Italy, and Portugal relatively affordable compared to UK, Germany, Nordic countries, Scandinavian countries. Things are relatively cheaper, so it's more manageable, and you can realistically get yourself a good deal with a decent amount of money. So I would say you can start maneuvering your investments depending on your financial position, of course. But let's say you invested 100k and you doubled your money with crypto. So you extract this 100k, you just cash out, you take your profit, put the initial 100k in crypto, leave it in crypto as it is, and then you can start looking for some forms of investments. That's the power of diversification, meaning that you shouldn't always put all of your eggs in one basket. You should always try to maneuver your way around the market, because crypto has cycles, stock market has its own ups and downs, and real estate also, it has its own season, high season, low season. You can just try to maneuver your way around. But The most stable form of investment, of course, is real estate market. Real estate, I mean, if you buy a unit, if you buy a real estate unit, it's not gonna disappear next morning. It's not gonna crash next morning. Probably the price will fluctuate a little bit. Sometimes it's higher than you got it, sometimes it's slightly lower, but generally speaking, on the longer run, it will continue to hold value. Holding value here is the key, because if you leave your money in a bank, then inflation will just eat it up. And inflation nowadays is just a beast. It's just a beast. Compare things like few months ago till now, you'll find that just inflation is just eating everything up. So you shouldn't put any money in the, no, not really any money, not than necessary, not more than necessary. Let's say if your monthly expenses are X amount of money, you should probably put X plus a small amount on the side, and that's it, or probably 2X. If you're spending like $2,000-3,000 a month, probably in your bank should be between 6 and 7K. That's more than enough just to get you by. If things happen, you can have yourself, you can secure yourself for 1 or 2 more additional months, and that's more than enough. If you're leaving a big chunk of money in the bank and it's not moving, that's a big problem, because you're missing out on a lot of opportunities. If you put it in Bitcoin, Bitcoin can do 20 to 30% in one single month. 20 to 30%. If you're putting 10K in crypto, you can get 3K out of nowhere, But also, one element of risk here, that Bitcoin can crash 50-60% in one single month, or two months, let's say a short period of time. It can crash severely. And if you look here at the crypto market charts, you'll find that Bitcoin has done it many times before. Let's go to the yearly chart here. You'll find that Bitcoin currently, that's 46K, and all the way to nearly 36K or 40K. So that's 6K out of nowhere. That's just wiped, disappeared. So if you go to the all-time chart, you will find here a peak in 2021. That's all the way to nearly 68K, and a few months later, that's going all the way to 19K or even below. So that will give you a glimpse of how volatile crypto is, and that's why you should always diversify. There is no such a thing as 0% risk. You will always have to risk it. No risk, no fun. And the bigger the risk, the bigger the reward. But you have to adjust it depending on your own financial position. Nobody will tell you how to do it. You have to know and understand your own financial position. You have to assess your own flexibility with financial loss and gains. So that's completely up to you. You have to sit with yourself, or just consult someone, your financial consultant, or tax advisor or whatever. Just understand your financial position, so you can make some more rational decisions around the market, and you can try at least to maximize your profit and minimize your risk. But never put everything in one go. Never put everything in one form of investment. Not everything in crypto, not everything in cash, not everything in stock, not everything in real estate, because real estate can also enter through phases of heavy movement, meaning that if you're just in a squeezy financial position, and you just want some cash, you want to liquefy some cash, then probably the market wouldn't move, or you wouldn't really be able to sell as quickly as you hope. So that means you always have to have some cash on the side, you always have to have some stocks on the side, you always have to have some crypto on the side, and then some real estate. Of course, there are different kind of projects you can invest in, but these are, I will just do some separate videos for that. But let's just talk about the pillars of investments in today's day and age. That's crypto, that's stock, and that's real estate. Real estate, probably one of the most stable form of investments, and it can generate some steady income for you. If you're just buying a unit, you can rent it out for a steady income for a few months. So that's very sweet, that's very nice, and the value of the unit itself, it's holding, so there is no hiccup there. The higher risk here being crypto. The medium risk is being stocks. Stock market is more or less, it's doing well on the grand scheme of things. Generally the prices are going up. Generally speaking, stock market is just developing year after year. Even if we're experiencing some hiccups here and there, some crashes here and there, some corrections here and there, generally speaking, if you just leave it for a few years, you will have more money than you entered, plus even that you're securing yourself from inflation. And the sweet thing is that some stocks can have splits, meaning that Nvidia some weeks ago, a couple of months ago or so, they did a 1-to-10 split, meaning that if you have one stock equating to $1,000, now you have 10 stocks if each of them has the value of $100, meaning that you potentially can grow it all the way back to 1K per share or per stock. So that's a sweet thing. And these kind of topics that you need to understand it more, you need to educate yourself more. I will be dedicating a whole series for these kind of things, but that's an invitation for you to start understanding that it's your responsibility to be financially independent. That's your responsibility to understand what's going on in the market. Even if you're outsourcing these kind of investments to a management company or an asset management company or a wealth management company, or whatever you're doing, it's your responsibility to understand what are they doing with your money, because nobody will care about your money but you. Nobody will care about your hard-earned money but you. So understand and have trust also with the people you're dealing with. Understand what's going on in the market, where to buy, where to sell, or roughly where to buy, roughly where to sell. You will never hit an absolute top of the market, and you will never hit an absolute low of the market to buy. So you will have to have some I would say sway and flexibility and margin of error, and you just need to understand that it's not going to be perfect every single time, but if you're just winning more than you're losing, you're doing good. And also in terms of real estate, if you're consulting good people and you're understanding the market yourself, you're doing your own research, you're just calling up people, calling up real estate agents and going for apartment views. I'm currently in Spain. I'm staying here for a couple of weeks just to understand what's going on in the market before buying anything. Prices, yeah, are quite lucrative, and you can get decent apartment or decent flat for like between 60 and 80K, and it's relatively central and it's in a decent condition. But before investing that amount of money, because at the end of the day it's not really nothing, it's just, yeah, I know it's for an apartment that's relatively cheap, but it's also hard-earned money. So you need to understand what's going on in the market. You need to understand how to maximize your profit. What's the expected rent for that? What's the tax implication? Because taxes, that's a whole different story. Depending on where you're registered, where you're living, what country you're tax resident at, things can be quite tricky. So you need to understand your position, and nobody will tell you your position but you. You will have to do your own study, and you will have to consult not one but many people and listen to many opinions, and then based on your own studies you need to understand where is your actual true position is, because some advisors out there, unfortunately, they're just giving false information and they're making people's life are just chaos. So you will need to understand that, and you will need to have enough courage to approach the situation. Anyway, probably that wasn't really more or less about diversification. That was just blah 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 and chit chat, but it's a good way to start to draw your attention to the power of diversification. You shouldn't put everything in one go or in one place. You should always try to diversify. I will be making dedicated videos in details about the whole thing, and I'm just trying to find the proper setup to do so, or just do it on the phone and screen record the whole thing. So it's just gonna be more or less a practical way of doing things. But generally speaking, things are looking good in the market right now, and it's always a good idea to start investing, or at least to start thinking about investment. And of course, if you're subscribed to this channel, we will go through this journey together. So see you next time, and thank you all for attention. Bye bye.